I'm Lisa Gonzales, Chief Business Officer here in Mount Diablo Unified. There's been a lot of talk about ending fund balances, and there seems to be some real misunderstandings. So the purpose of this Ask the CBO is to talk about why there were large ending fund balances this year, a little bit about financing and fiscal transactions within school districts, and then a breakdown of where those funds are so that the public and all of our stakeholders can really understand why there are fund balances. So let's just get started. What is a fund balance? A fund balance is a book accounting that really tells us what's left in an account at the end of a year. It doesn't mean cash. So we have cash accounting in school districts, and we have regular bookkeeping, but a lot of times those are very, very different. So a fund balance is not a cash balance. It doesn't translate to cash in the bank. It talks about revenue we expect to receive. And then it sort of kicks in something that's called an accrual process. I'll get to that one in just a second, but let me give you an example with educator effectiveness. Educator effectiveness is a funding source that we received in about May, June. We had to record the fact that over 5 years, we are going to get approximately $17 or $18 million. We don't get the cash behind that. And as we spend the money, we submit evidence of that to the state, and we're able to get cash for that. But we have to record it, or we have to book that as revenue, which makes it look like it's in the bank, but it's really not. So let's talk for a second about an accrual. And I'm going to give a very specific example of something that happened last year to help better ground this concept. The state gave Mount Diablo Unified an allocation. They let us know over 2 years, we were able to spend $5 million in a particular grant. In the last school year, we spent 3 of the $5 million. Now, when they tell us that we're going to get $5 million, they don't just send us the cash. They say, you're going to receive over time $5 million. We spent $3 million, but we only got $2 million in cash for that, which means right now we're in the hole $1 million. When we close the books for the 21-22 school year, we have to accrue $3 million, which basically means that we have to put on our books that we have money to spend for the $3 million comprised of the negative $1 million that they still owe us and the $2 million we have not spent yet. So what does that mean? It means that the fund balance shows $2 million that we haven't spent, and we're still negative $1 million. So again, fund balance does not equal cash. When we get the cash, we will get $3 million. I know, a little bit confusing, but let's keep going with this. Let me give you an example of a fund balance, of something that is left at the end of a fiscal year. It could very well be a donation to a school site, and the school site didn't spend all the money, so the money is still sitting there and available for them. It could be a department that has stated that it's going to spend $20,000 on substitute teachers for professional development, and there were some professional development days that were canceled, or not enough subs were able to be found. So those are the types of things that can cause a fund balance or money that's not spent at the end of a year. Let's look at some other examples. So orders are placed, the products don't arrive in time. We have to balance our books, close our books, similar to how you'd balance a checkbook. You'd be balancing a checkbook and you've written a check and it hasn't cleared yet, right? That's kind of the challenge that we run into. That causes a fund balance. If we can't fill a position during the year, first interim, second interim, we're able to go back and we're able to capture vacancy savings, but we're not able to capture anything after the beginning of March. That would be another example. If a department isn't properly budgeting, they say that they need a certain amount, and then they don't really need that amount or they don't spend it. And we work very carefully with all the departments and all the school sites on this. It's still not a perfect science. You can end up with a fund balance that way. When the funds come late in the school year, we have had this happen so many times, and educator effectiveness is probably the biggest example of that, because even if sites want to spend some of their funds, if we're not getting them until May or June, we know that we're not going to let them spend those funds because they're not going to be able to get whatever it is that they're ordering by the end of June. If we receive a multi-year funding source and the money is split over multiple years, COVID's been a good example of that. We have to acknowledge the fact that we're receiving some of the funds, but we don't actually get them yet. So there were two ending fund balances for this last year, for the 21-22 school year. This came out in our unaudited actuals. Our auditors are now working on the audit, but there were two different ending fund balances. The restricted was 42 million and the unrestricted was 87 million. Let's first look at the difference between the two. Restricted, and there's going to be a quiz at the end, but restricted funds, they are very specific. There are rules for the spending. There are clear timelines. They generally always have reporting requirements, which means you can't just go out and buy whatever it is that you want or use things for salaries that are not included for salaries. And they always have some type of string attached. Because they're hardest, we always try to spend those first. But sometimes it's very difficult to spend those funds. Think about your Starbucks card. You can't put your Starbucks card in an ATM machine to get cash or to use it at a gas station. So I think that's a really good example of restricted. Let's look at unrestricted. No rules. Sometimes it does or doesn't have reporting. It depends on the source. But we do have some flexibility around that spending. We spend that last because it's easiest to spend. So we want to use up that Starbucks card first, and then we want to use our credit card for going other places. We don't want to use our credit card for Starbucks when we have a Starbucks card. I think that's a pretty good example. So let's talk about the unrestricted ending fund balance, because we're not going to look at the restricted because it has very clear rules. So we don't have a lot of flexibility on what we can do. And a lot of that is tied to grants. So when we look at the unrestricted ending fund balance plan, this is what the money is being spent for. And these are the ways that we have had to protect it because of commitments we've already made. A lot of this has to do with timing. We do our unaudited actuals in September, but we're not able to go and actually acknowledge a lot of our expenses over the summer that we'll see in just a second. We're not able to do that until first interim. So we're going to look at just the unrestricted side. That's the 80 some odd million that I just shared. Let's look at district supplies and equipment. There are many orders that we placed last year that we didn't receive the items, even though we had booked the expense last year. We didn't either receive the items or a lot of the vehicles that we've been waiting for now for almost a year and a half didn't come in. And so what we do is we hold those funds because we're still waiting for those to arrive. You can think of the supply chain issues with vehicles. That's the problem that we've had in district supplies and equipment. Another one, salary agreements. We made a multi-year salary agreement, and that money needs to be held in our unrestricted ending fund balance. LCFF supplemental, local control funding formula. We receive supplemental funds based on the demographics of certain groups of students that allows us to provide more support, resources, programs, and staffing for those students. If all of those funds, especially at school sites, are not spent down to the dollar, that money is collected at the end of the year, and it can only be used for that same exact type of thing the following year. This is a new change in California, but we have to show that everything left at the end of the year with LCFF supplemental stays with LCFF supplemental. So we have to protect it just for that. That for us is close to $10 million across our district. There were some hiring bonuses that we agreed to that were approved by the board in, I believe it was August. And because that happened in August, we had to hold some of our ending fund balance. So when we closed last year's books, we knew we were going to have to pay this, but it hadn't been board approved. So it sits in the unrestricted ending fund balance, and you'll see those funds move when we do first interim. Just a couple more here. Many of you may remember a little over 2 years ago, we had more than 220 valuable MDUSD employees who retired. Part of that retirement was an agreement that over 5 years, they would receive a certain amount of money every single month for retiring early. It was an incentive package. We have to hold that money aside. We still have about $5 million to spend on that for those employees as part of those agreements. And so you can see that one. It's not as if we can take those funds and use them for anything else. They've been promised. The last big one there is textbook adoption. Kudos to everybody that worked super hard to make sure that we received all of our science textbooks prior to June 30th. We had agreements from the textbook manufacturers that we would receive those. Most of them came in, but it took us another month and a half to finally get the invoices from them, which meant it was too late to be able to pay it with last year's money. So we still have the money set aside. This is a commitment that our school board made. And in textbook adoption, we have to hold those funds because right now, we are paying a lot of those expenses because the invoices have come in. It is also a commitment because we have 2 more years of textbook adoption coming down the pike. That pretty much sums it up. I know there was a lot in this, but I wanted to make sure that you had accurate information. It's not as if we had $127 million that wasn't spent because we were negligent in any way. It really has to do with the timing, and it has to do with the constraints of commitments that we've made to purchase specific items in our district that our students and our staff need, as well as raises, retirements, and other things. So I hope this helps explain ending fund balances, especially on the restricted side. If you have any questions, please do go ahead and send those to cbo@ndusd.org, and we'll see you next week.